But there are a few different types of index funds out there, so let's dive into the differences now. The traditional index fund investment is actually an index mutual fund. While that might sound confusing, all that means is the fund management team follows a passive approach with the fund. Instead of picking individual investments, the fund aims to replicate an underlying benchmark or index as closely as possible. This requires a lot less work and fewer fund managers, so as a result, the management fees are significantly lower than traditional mutual funds. These index mutual funds usually come with a minimum investment in order to get started. For example, the minimum investment for the Vanguard 500 fund is $3,000. That minimum investment is out of reach for many investors who are just getting started, and that's where the other type of index fund comes into the equation. Exchange-traded funds, or ETFs, have become the preferred method for investing in index funds today. These ETFs are fund investments that are split up into individual shares, and then those shares trade on the same exchanges as individual stocks do. The benefit here is this makes investing in an index fund as easy as investing in a stock. Instead of having to put together $3,000 or potentially more for an index mutual fund investment, with an ETF, the minimum investment is going to be the cost of one share. And today, fractional shares have become a commonplace. This allows investors to purchase a small piece of one individual share, further lowering the barriers to entry for getting started. For example, with Robinhood, which is the brokerage platform I'm going to be showing you shortly, you can invest in these fractional shares in $1 increments. So instead of needing $3,000 to invest in an index mutual fund, or about $500 to buy a whole share of an ETF, you literally just need $1 to invest in a fractional share of an ETF. You can also buy and sell these ETFs during the same trading hours as individual stocks, whereas with index mutual funds, there is usually just one trading window per day. So we're going to continue on here looking at these ETFs as the preferred method for investing in index funds today.